Hey guys, it's Kevin Kleinman, head trader at Watchhimtrade.com. It's Monday, October 20th, about middle of the day, 12:30, and it's been a pretty slow market day, and I just kind of wanted to update some things that I'm seeing, or kind of more along the lines of what I'm not seeing here, because you are up on the day here, but as I'll show with this S&P chart, I'm a little concerned from the bullish side of things that we haven't been able to get above 1900 yet. You're looking at a daily chart of the S&P 500, and you see that Friday's high was 1898, today's high 1896, so we're in danger of putting in a lower high here. And if we break this down into a tick by tick chart on the day here, you can see that you have been in a very pretty boring activity here today on the S&Ps, just kind of in a tight channel. If you look at a minute chart, if we go to a 3-minute chart on the day here, you can see that today's session is this price action right here, and basically what you had is you had a slight gap down with a move up right at the open from 1882s up to 1892s, but since then you really just haven't gone anywhere. You have been trading between 1890 and 1896 since about 10:30, going on 2 hours, which, if you think about the volatility that we had last week, is pretty incredible comparatively speaking. Because if we just go back here and look at some of the volatility last week, let's just pick a day. All right, so this is October 14th, and you can see that you traded in a range 1898s on the high. At 12 o'clock, let's just go out 2 hours later, you were 1886, so a 12-point range. Then 2 hours later after that, you were 1870s. All right, so another 15-point range. From there, you look at the next day, October 15th, you went 1837, first 10-15 minutes of the day. Then at around 10 o'clock, you were up in the high 1860s. So you had just a huge bounce, 30-point move. And then from there, 1866 is on October 15th at 10:15. If you go to 12:15, 2 hours later, you were 1840, so a 20-point range. The reason I'm using 2-hour ranges is because I'm trying to make the point that over the last 2 hours you have just been pretty much between 1890 and 1896. Very tight range, whereas previously last week we were seeing very wide 2-hour ranges in the S&P. So volatility's really dropped off here, and I'm not sure how I feel about that necessarily. You could argue that, oh, low volatility environment is a bullish environment, but somebody who's bearish would say, oh, low volatility up here and you're not above 1900 resistance means that if it does start going back down, it's going to have an easier time moving down. Volatility is going to increase to the downside, and it'll be kind of like the take the stairs up, elevator down type scenario. Of course, talking about a market that goes up slowly and goes down quickly. So for me, though, my take personally would be kind of that more bearish scenario. How come we're not above 1900? I like the way that we've held the 1890s pretty much for the last few hours. That's something we were unable to do last Friday when you tried to come above 1890. You couldn't stay above it. You ended up getting faded off of it. But what I don't like is that, how come we haven't started to break out up towards 1900 yet? So that's what I'm watching for mostly, is just kind of this 1890 to 1900 range, and you need the S&P to get above 1900. Otherwise, I expect us to go test Friday's low on up to today's low, which would be, or Friday's afternoon low, I should say, which is basically 1875 up to 1882. So 1875 to 1882 is a pocket of support I would watch for, and if you break down at that support, then I think you can see the market go back down towards 1850, 1848, which was its 2013 close. Now if you can get above 1900, then you can start rallying again, in my opinion, and start to look like you have more of a confirmed bottom in place. Resistance levels you'd want to watch would be the October 13th high of 1912 and then the October 10th open of 1925, and 1925 was previous support on October 8th and October 2nd. So if you can get above 1900, 1912 to 1925 would be the target, and then breaking out there, we start to look for a move back towards 1950, which would coincide with a back test on this previous uptrend line. So that's the way I see the S&P. Do I think there's a bottom in place? I do think we have pretty solid evidence of a potential bottom, but that doesn't mean we're not going to channel back down towards 1850. So I'd still be looking at short trades here more than long trades. Long trades come back into focus for one of two reasons. We get above 1900 and kind of show some confirmation, or we come back down towards that 1850 to 1820 low, which was last week's low, and you start looking at long opportunities. But while up here and while below 1900, I think this is kind of a channel short. So good luck, and watch that 1900 level.